Okay, markets performance today, just general trends we're likely to see going forward?
It depends on which time horizon you look at. If you look at it at a 5-year period, we are still far away from bottoming out. If you look at it at a 3-year period, we might have a bit of a mini bullish run in the short term. If you look at it in a 1-year period, we are about middle in the market where the market should trade sideways.
All right, we seem to be having some technical problems whilst our technicians address it. Let's take a look at how African currencies have performed. Okay, we don't seem to be having those African currency hotboards, but we do know that they're trying to address the technical situation affecting Reginald Kadzutu's interview. We do know today that the Kenyan shilling has surged 2%. It's still coming in under pressure, somewhere in the region of 92 shillings to the dollar. High dollar demand because of importers. Also, you know, the drought situation in East Africa has created a situation where a lot of aid agencies are needing to import foreign currency in order to support their aid programs within the Horn of Africa. So later on in the program, we're going to be discussing this Kenyan shilling and whether the CBK's decision to abandon reverse repos for the interim period will help to give some sort of liquidity into the market. Let's take a look at how markets have performed. Right, as you can see, the gremlins are out to get us, but we're going to beat them at their game. Reginald Kadzutu, Head of Fund Management, standing by from Amana Capital. I hope it's much better for you, Reginald. We were talking about markets performance. Let's talk about the results coming through. Ati River, they've shown earnings growth of 30%. A big issue for a lot of the cement makers has been boosting capacity. What do you make of Ati River?
The results from the cement sector basically give a sign that the economy is not yet in that state where we should worry. If you see your cement companies still posting double-digit profits amidst all the noise that is around the macroeconomic fundamentals of the country, then you still believe we still have maybe a 3-4 months, a quarter or two of good economic growth in the line.
Yeah, okay. And we have seen today Bamburi doing well, gaining about 1.18% on the share price. When you do a comparative analysis of Ati River and Bamburi, because actually what we've seen with Ati River is that earnings per share, although up, has really been hampered by the fact that shareholders have to pay higher taxes. So would you rather be at Ati or Bamburi?
If you want to go for stable growth, long-term growth, and if you want to go for predictable income, I would go with the Bamburi because of their dividend payout ratio, and basically they have 80% of the market. But if you want the occasional capital growth from your shares as a source of income, then Ati River Mining will give you better, because Bamburi won't go up that much, but it will go up in slowly, but it will give you predictable dividend income.
Let's talk about results coming through from the banking sector. CFC Stanbic Bank, their results up 39%, and they've done well across the board. Everything from interest earnings, investments, and also their loan books. How do they compare to other banks that have also seen stellar results, at least the top tier ones?
The banking sector, yes, has had good results. If you look at the results on a year-on-year basis, but in the current market that we're in, with what we are seeing in the NSE stock exchange and the general macroeconomic condition in the country, you'd want to look at their quarter-to-quarter numbers and look at the momentum that they have, so that you're able to look at what is going to happen at the end of the year. And most of them are they've lost momentum between first quarter and second quarter, and we expect it to carry on into third quarter. So if you do a forecast on that based on just on the momentum on quarter to quarter growth,
right,
most banks, yes, they'll still have double digits, but below 30% for full year results.
And of course, inflation is going to have huge bearing on the ability of general customers to service their debts. What do you make of Family Bank? Because they're wanting to come onto the market, expected public listing somewhere around October. The timing and the valuation of Family Bank?
In terms of timing, I don't think this is the best time for them to come to the market. Argument would be, let's see how British America does. But my own opinion, I don't think British America would do that well. The valuation of British America was not done that well, and you'll find that we have issues on them. So Family Bank, the timing, I would rather have them postpone it to maybe to next year after elections, when there's general optimism in the market and people are looking for places to place their money. In terms of valuation-wise, they are restructuring. They've just gotten a new CEO, Peter Munyiri, who's a well-grounded banker who has experience and who will be able to drive the bank forward. It's the matter of how they're going to implement their strategy. Are they going to remain at the bottom of the pyramid and try and fight it with equity, or are they going to move a notch higher, try and fight it with Diamond Trust or the SME sector? It depends on what strategy they will put in place.
I think the strategy is really East African penetration, especially with the rise of Southern Sudan. When you talk about momentum, I think it's a catch-22. The NSE needs a lift, and many experts say only new listings are going to bring that lift. But with the market down right now, the ability to raise capital is not great. So what do you do when you're a company?
If you're a company, you have two options. If you want to do the equity way, I'd rather you do either a more of mezzanine financing, where you give out debt which can be converted to equity and you get your liquidity through an IPO or something like that, if you really need the funds. If you really don't need the funds immediately, you can postpone your IPO, go the commercial paper way. You will still get better rates on commercial papers than if you get a loan from a bank. Funds are there in the market. People have moved money from the market, so money market side has a lot of money. Go the commercial paper way, fund your operations, then at the right time, come to the market.
Let's talk about the gainers in today's market. We have spoken about Bamburu. East African brewers also making a bit of a comeback after a lull, gaining 4.6%. What's going on there? Because we were told they're going to be impacted by things like an alcohol tax. They've had some issues regarding Serengeti in Tanzania. Although, you know, Kenyans love their beer, there was just a sense that not right now.
Basically, if you look at East African breweries, and if you look in terms of competition again, they are kind of like a monopoly in a way. They own most of the market. And the people that actually drive East Africa breweries, like today, 98% of the trades that happen in East Africa breweries were from foreigners who continue to see intrinsic value in the stock. If you look at the current valuation of East Africa breweries, look at their future, it's still buying it at a bargain. So basically, it's foreign investors that have seen a bargain, who have liquid funds, their own markets are not doing well, go into a blue chip company in a developing market.